Hi, everyone. Thank you so much for joining us today. My name is Asha Dakshinamurthy. I'm the product lead for asset digitization at Alpha Point. Some quick housekeeping, because of the number of participants we have dialed in for this webinar and the fact that we are recording this session, we won't be taking questions during this webinar. However, if you have questions about any content from this presentation, please feel free to reach us at sales@alphapoint.com or through your account manager if you're a current client. So we wanted to do this webinar because real estate is one of the key areas that we cover for asset digitization. It is a topic that has been the most popular in the digitization space since the launch of security tokens a few years back. However, we have found with a lot of our customers that there is quite a bit of confusion in the market in terms of how you go from a physical property to a digital token, right? And how you actually tokenize real estate. And so that's why we wanted to cover this event today. We will go into a bit about Alpha Point for those of you on the line that are unfamiliar with our firm. We'll define what real estate tokenization actually means and take a look at the market overall. Then I'll talk through some of the structures that people are using to tokenize real estate, what that actually means from a legal perspective. And then we'll walk through the steps to actually tokenize a piece of real estate. And then finally, we'll look at some considerations if you're entering this market and where we think the market is going. So quickly, Alpha Point was started in June of 2013. All of our leadership has extensive capital markets and fintech experience. We primarily focus on two areas. We started as white label cryptocurrency exchange software, and we also provide white label asset digitization software. Our customers are around the world in over 39 countries, and we have over 100 global customers in production to date. So on our products, as you can see here, they're really focused on three areas. The first is asset digitization and custody solutions. So these are going to be the software tools needed to create a digital asset that represents a variety of different industries or asset classes, including real estate. The second piece here is going to be the exchange and settlement software. So we provide custom proprietary software around a matching engine, an entire order management system, and settlement software for digital assets such as cryptocurrencies or security tokens. The third piece here is data and then financial products or derivative products on top of all of the asset digitization and exchange software. So we provide the ability to create custom white label indexes. We offer two indexes of our own as well. And then we offer the ability to create a derivative product or a bundle of different digital assets through our Smart Baskets technology. We are blockchain or distributed ledger technology agnostic, meaning that our software is designed to work with a variety of protocols such as Corda, Ethereum, Hyperledger, Quorum, etc. So the idea is that we work with our customers to figure out the best technology for them, and we build around that. Our platform and our products are all modular, right? So these are kind of the five areas that we offer, from issuance, custody, trading, liquidity, and data. Everything here is very much plug and play, so you can take the entire suite of software. We are one of the only firms that offer the entire end-to-end, from tokenization, digitization, through trading, through data, through custody, or you can pick and choose the particular products that make sense for you. And we've been recognized by a variety of reputable and industry-leading companies out there. And we're very grateful to all of you, our customers, for being a part of this journey. So let's get into real estate tokenization in particular, the content of this webinar. So I think to start, a few definitions are helpful, right? When we talk about tokenization, there's a variety of terms that are used in the market. security tokens, digital securities, digitized securities, asset-backed securities, etc. So I just kind of want to level set at the beginning here. Real estate tokenization really just means it's the process of creating a digital representation of a physical property or a group of properties. On a blockchain-based system, that digital representation is most often referred to as a token, hence the word tokenization. From our perspective, we tend to prefer the word digital securities. I think a token can be a variety of things where it's not necessarily a security, but with real estate, we're looking at securities in the traditional sense as an investment vehicle where investors expect to either receive an economic appreciation of value or a dividend distribution, right? So these are securities in the traditional sense, where so the word or the phrase digital securities makes the most sense here. And you might have heard the word smart contract. That simply is a term specific to the Ethereum blockchain. There's equivalents on other blockchain technologies, but smart contract is essentially the code that encapsulates that particular property, including all of the data, the rights, restrictions, and business logic. So the market has really shifted in the blockchain space from cryptocurrencies to initial coin offerings, and then over the past couple of years to security tokens, right? But we kind of see this as part of a broader trend to digitize assets overall and create a new infrastructure to trade and manage securities. In fact, the World Economic Forum predicts that by 2025, 10% of all global GDP will be stored on blockchain. And the trend to really digitize real estate, to digitize private equity, to digitize bonds using a blockchain-based system is part of that larger trend. We're seeing countries around the world taking measures to further blockchain innovation, including with central banks testing out digital currencies through creating systems to record title on blockchain. And we're seeing regulatory bodies such as the SEC publish frameworks so that investors can participate in this new digital economy. I have a few examples here of real estate tokenization projects or offerings that have happened in the market thus far or are going through ongoing raises. Muirfield is a client of ours. They have tokenized a real estate private equity fund using our technology. I think one of the more famous ones in the market is the St. Regis Aspen through Elevated Returns, where they raised 18 million for the St. Regis Aspen Resort using blockchain technology. In Switzerland, in the canton of Bar, about 3 million Swiss francs were raised for the Hello World restaurant, including 18 apartments using blockchain technology. And then on the far right at the bottom here, we have Invenium Capital Partners. They're raising about 260 million for 4 tokenized real estate properties, the first of which will be a $60 million WeWork building in Miami, right? So, in the broader scheme, all of these, they're 18 million, 60 million, whatever it is, they are much smaller when you look at the broader real estate asset class. However, this is, again, a shift in the direction of digitizing assets that we have today and providing a liquid method of trading them. So why are all of these players really looking to tokenize real estate? When we look at the benefits of blockchain, I think there are a lot of promises, but I think when we take a look at real estate, we can see there are some particular tangible benefits to tokenizing or creating that digital security representation of a real estate asset. The first here is about increased capital access, right? So if you take a building today and you are trying to raise money for that, the reality is you're going to be limited to the market within which that particular property operates. Creating a digital representation of that, fractionalizing the shares to offer lower investment minimums, and then doing the fundraising process in a digital marketplace increases your access to capital globally, compared to if you were to do it through traditional methods where you're limited to your current connections or your current marketplace. The second piece here is reducing or normalizing the spread between the illiquidity discount and the liquidity premium of some real estate structures today. So if we look at illiquid real estate assets, which is majority of the assets that institutional investors have access to, they tend to be priced at an illiquidity discount up to 50% of the actual asset value. On the other side of the spectrum, when we look at products such as real estate investment trusts or REITs, which are available on an exchange for investors to trade, because of their liquid ability, they tend to trade at a 20% premium, right? So on one end of the spectrum, we have something that's 50% below asset value. On the other, we have something that's 20% above asset value. So the idea that we're going to be providing a method to trade and create liquidity for all real estate assets will help normalize the spread between very illiquid individual assets and real estate investment trusts. The third piece here is on enhanced price discovery. So if we create this kind of digital secondary marketplace and provide, real-time pricing information, again, for these traditionally illiquid assets, we can enhance price discovery and enable buyers, better tools to really negotiate and take a look at the asset value. And then the final two pieces here, they really tap into, I think, the benefits of blockchain. So on a blockchain-based system, we have the technology to really couple together the financial instrument on the digital ledger with the underlying real estate itself. We can program in all of the property data, the shareholder rights, any sort of information needed into that particular token or digital security, helping link together that financial instrument with the underlying property. Right? And that piece of information lives with it throughout its entire life cycle. And because this is all available, on a digital record, where we can see at any point in time who the shareholders are based on your particular permissions, cap table management, distributions, governance management, all of these traditionally difficult and friction processes become automated and simplified. So how are we actually going to tokenize real estate, right? When we look at the market today, we tend to see, four structures by which firms go about tokenizing real estate. And this is really about wrapping that particular real estate in some sort of legal structure. And so again, there are some, blockchain applications where you're not necessarily looking at securities. But when we look at real estate, there really isn't any kind of question as to whether or not this is a security for investors. And therefore, the need to kind of put a legal wrapper around that real estate is very pertinent. So we tend to see four different structures, and all of these are really no different than the structures that are in the market today for raising capital. And so for anybody that's in the real estate industry on the phone, this should be of some comfort that this really isn't something new, but it's an efficient way of managing this entire process. So first here, and I'll just go over these quickly, is the single asset SPV, right? So this is creating a single LLC or legal structure that holds the title and deed for that particular property. When you are purchasing tokens, it actually just represents shares in that legal entity, and so you're considered a shareholder. And the operating agreement of that legal entity basically dictates that the shareholder record is updated in real time in a digital record, and that digital record is your blockchain system. The second here is the real estate fund. And so this is pretty similar to the first. It's going to be a private equity fund that invests in a variety of properties. Again, tokens represent ownership of shares or units in the fund. Investors tend to have either dividend or voting rights. Now, these first two, the single asset SPV and the real estate fund, are typically limited to accredited investors or qualified buyers, kind of depending on your execution regulation. But typically, the size of these particular offerings are not going to be significant enough to support the cost and the legal work required to do a full near IPO or public offering. The third one here is about project financing. So this is where developers can kind of use tokenization to raise funds for a new development. You can create kind of an efficient method for capital formation in a digital marketplace by creating tokens offered at a discount that represent future income or rights to the property or that's being developed or the renovation that's happening. And again, depending on the execution regulation, this could be offered to retail investors under crowdfunding regulation, or if it's of a much larger raise, it may have to be limited to accredited investors. The final piece here is the real estate investment trust. So this is, up to the operator to kind of file and be licensed to operate the trust. There are specific requirements to operate a REIT. You must own and operate income-producing real estate. You must provide your investors with at least 90% of the taxable income on the underlying properties. But the benefit of all of this, of course, is that this is something that can trade on a public marketplace and be available from day one to retail investors. So if we take a look at how to go from a property to a digital asset, I think there are really 4 key phases. The first is about deal structuring. The second is the technology selections. Third is going to be the actual token creation and distribution. And the fourth is ongoing management of that token. So in phase 1 here, deal structuring, right? So this really depends on the type of property you want to look at, the type of investors you would like to participate in your deal, the shareholder rights you want to provide, your execution regulation based on where the property or the SPV is located, etc. So this deal structuring phase is pretty similar to deal structuring today. The kind of key difference is, some of these things here will influence some of your technology selections, but beyond that, the things to just kind of consider are, is this a commercial or multifamily real estate? What kind of legal structure do I want to put around the asset? Do I want my investors to have dividends or voting rights or liquidation preferences? Do I want to target retail or accredited or institutional investors? And then based on, where your investors are located, where the property is located, and where your SPV is kind of filed, you'll have to take a look at what execution regulation you fall under. A lot of times we see customers choose to tokenize an existing deal or essentially create digital representations of existing shares for a group of investors and provide them with a marketplace to trade those shares either amongst themselves or in a broader market. So you're providing liquidity for your current investors, and then simultaneously you can get used to the process and then take a look at actually raising funds for new deals. So the second part here is about technology selection. There are a number of choices that I think you would need to make, and this is where a software vendor such as AlphaPoint will kind of walk you through the process step by step and support you in making these technology decisions. The first part is about defining your token, either through a smart contract or the equivalent. So here you would need to determine, which blockchain you'd like to use. As AlphaPoint, we can obviously make a recommendation as to which we think would be appropriate based on, the type of property that you're working with, the type of restrictions you'd like, and the jurisdiction you're operating in. You'd then want to define any on-chain data into the token. So, as mentioned before, kind of the benefits of using a blockchain system is that you can really include data and information about the underlying asset into that digital representation. And so at this point, you'd really be defining, the set of data that you want included, whether that's the address, whether that's the property sponsor, whether that's the execution regulation, investor rights, all of those are kind of fair game to include in the token. The other thing you'd want to determine is any documents you want hashed into that token. So what we can do in a blockchain system is create a unique string that represents a underlying document. So that could be something like your PPM or your investor agreement. And investors at any time can go in and verify that the documents that they received actually match that unique string. Or if there are any changes to that, you'd be able to see that on the system itself. And so again, that's really just about coupling together the digital asset with the underlying property. And then under the token definition, the final piece here is about determining your transfer restrictions. So with a blockchain-based system, the benefit is that you really get this kind of programmable compliance regardless of which blockchain you're on, meaning that that particular token or digital asset can trade on a number of exchanges, but because it's all running on the same system, it's all subject to the same transfer restrictions or compliance checks. And so you don't have to worry about each centralized exchange making those particular compliance checks. It's all done at the time of creating the asset itself. So some things you might want to include are a lockup period, meaning that you can't trade the token for a certain amount of time, an investor whitelist if you're only dealing with accredited investors. If you need to cap the number of investors for regulatory reasons, that can be something that is enforced as part of the token as well. The next section down here is about custody. And I think this is often an overlooked part when you're just determining to go down the path of creating a tokenized property. Custody is an important part of a blockchain solution. When you're creating a digital token or a digital security, you need a place to store that digital security. Typically, we have seen retail-focused wallet or custody solutions. So if you hear the word wallet, that's really synonymous with the word custody in the blockchain world. So typically, the ones that have come to market thus far have been focused more around cryptocurrencies or utility tokens. But very recently, we're seeing the emergence of more institutional-grade custody solutions that are suitable for security tokens, such as real estate. So these just, when you're evaluating custody providers, ensure that they can have the security that you would require for an institutional custodian provider. These might be things like spend limits or transfer approvals. You might need a combination of cold or hot wallets. Cold meaning essentially that it's a custody solution that's not connected to the internet. A hot wallet is connected to the internet. It's as simple as that. Popular vendors that provide custody include BitGo or Prime Trust. And so just ensure that whatever technology vendor you're working with for your token can also either provide their own custody solution or integrate with your preferred custody solution. From an Alpha Point perspective, we integrate with all of the top custodian providers, including the ones I mentioned, as well as Ledger and a few others. Continuing on with the tech selections, right? I think there are kind of two more things to think about. The first here is KYC and AML. So as you would with a traditional securities offering, you would need to perform know your customer anti-money laundering checks on all your prospective token investors to ensure that they are the appropriate investors for your particular deal. And I think that this particular requirement isn't new, but what is new is that your KYC AML vendor must be equipped to integrate with the platform that the tokens are being created on, right? And that's because you often have some sort of investor whitelist, and that whitelist is linked to the digital security itself, and it needs to be able to reference to your KYC database so that in real time it's updating, okay, this particular investor is approved to purchase this security token based on the results from your KYC vendor, and then it must update in the smart contract itself. So that integration point is just something to consider. There are a number of KYC AML vendors out there, Jumio, Verify Investor. A lot of these providers already work with firms like Alpha Point, and provide you with the entire service to tokenize your real estate and then connect it with the KYC system. But we just wanted to flag this as another consideration as you're going down this journey. The last piece here is about the secondary marketplace, right? And the key here is, if you're going down this path of tokenizing real estate and creating digital representations, you'll need a marketplace with some sort of liquidity, to provide your investors with. Otherwise, the benefits of really digitizing real estate are small if you don't have kind of a liquid secondary marketplace to trade them into. Um, and I think it's just important to note, these marketplaces not only need to have the infrastructure to trade digital assets or blockchain-based security tokens, but they also need to have the appropriate licenses or exchange filings in your jurisdiction, whether that's an alternate trading system or full-blown exchange license. Um, there are various benefits to each one, but just ensure that whichever marketplace you select to either trade within, has those kinds of licenses and is also equipped to support digital assets on a blockchain system. And that secondary marketplace also needs to be able to integrate, not only with your vendor that has created a token, but with your KYC AML provider, your custody solution. Maybe there's custom data you want to provide around your particular property, right? So all of those are considerations when picking your secondary marketplace. From an Alpha Point perspective, we offer the software and the entire integration suite to create your own marketplace. So if you are a customer of ours that is either pursuing or already has the appropriate licenses and you'd like to create a marketplace, to actually trade these digital securities, and you want to act as kind of the market maker or the liquidity provider, we can provide the entire tech stack for you to do that, so you can really focus on your own core competencies. The next step here is about token creation and distribution. And from a tech perspective, this is the kind of the easiest part, but there's just a couple of things to really consider. The first is what kind of funds you want to accept. So the fact that you're on, a blockchain or digital asset system now means that you can open up the types of currencies you want to accept for that particular property, whether that's traditional, fiat currencies such as GBP, Euro, or US dollar, or you want to accept cryptocurrencies such as Bitcoin or Ether. Another option that we've seen is that is fairly popular is stable coins. These are digital representations that are pegged to a fiat currency, so it allows you to take advantage of blockchain-based payment rails with stability. So stable coins such as USDC or DAI are pretty popular as well. After that, in a web application that would be set up by your vendor, such as Alpha Point, you'd actually create the tokens itself. And that process is called minting. So you're essentially saying, I want to create, 1 million tokens that represent the Empire State Building, right? So that process is within a web application. By a click of a button, you're creating a digital asset, and that digital asset is based on the smart contract or the token definition that we defined in the prior phase. You also want to just make sure that whatever technology vendor you're working with, has added provisions on your blockchain system to destroy the tokens at any point in time or transfer tokens between investors. Those are pretty powerful tools, but they're required for your escrow agent or your issuer to be able to do so in order to be compliant by regulations. And then the next two phases are really about, onboarding your investors into your digital marketplace and then distributing the tokens. So you'd onboard your investors, in the web application. They'd go through the KYC AML. Investors would either need their own kind of custody solution that they can link up, or you can provide it with as part of your service as a hot wallet. And then by a few clicks of a button within the web app itself, you can send the tokens to your investor accounts. Investors will see their corresponding balance in their online portfolio and on chain, depending on the infrastructure you chose. And based on the token that you've created, they may have a holding period prior to trading. But this whole process of really onboarding investors and distributing their shares, right? You've just cut down the time from distributing, physical shares via paper, this entire back and forth process to, a few days on a web application where you're creating shares and then just sending it to investors once they're onboarded. The last phase here is about the ongoing management. And I think this is where you really start to see some of the benefits of using blockchain technology. So in terms of cap table management, the beauty of using a blockchain system is that no matter which exchange or which environment investors are trading on, your cap table on the blockchain is being updated in real time because all of the trades are happening within one kind of centralized system, even if they are trading within a variety of different marketplaces. So at any point in time, you can generate your cap table, and that entire process of cap table management is pretty much eliminated and boiled down to just kind of checking on chain at certain points in time what the current cap table is. And using that same real-time cap table, you can distribute dividends. Dividends can be issued via another digital asset such as cryptocurrency or stablecoin or even additional tokens of the underlying property. And that allows you to pretty much automate the dividend process and take advantage of the technology. Or you can choose to just use the chain as just kind of the source of truth and distribute a traditional fiat payment either through bank transfer or checks. But all of this would be kind of administered through the web application from your technology vendor, such as AlphaPoint. Within a few screens, you can take a look at your cap table in real time and then manage your entire distribution process. So that's pretty much the crux of what it means to tokenize real estate. And I think that there are a lot of promises when it comes to the blockchain space. But when we take a look at how to really phase out this entire trend of digitizing assets and creating digital economies, there are some considerations, particularly in the early days. As the market evolves, I think these are kind of the things to take a pulse on, right? So the first here is about data. Um, if you're going to be creating this kind of digital secondary marketplace for your investors to trade their real estate, you will need to be kind of responsible for either contracting or yourself providing updated data and valuations to ensure that you can actually facilitate liquidity and enable price discovery. Um, the lack of data and information about the real estate will mean that that particular property is just going to sit on the exchange and not actually trade, right? So as the actual property sponsor or issuer, the onus is really on the real estate provider to contract out that kind of updated data or valuations. This is also an opportunity for brokers today to really differentiate themselves by being that kind of third-party independent data provider in secondary marketplaces for digital real estate. And then again, when we look at the secondary markets, just kind of considering which secondary market you want to list in is going to be a critical decision. And then as you're going through the deal structuring phase, consult with the appropriate parties regarding tax implications of trading that real estate. There are certain structures that are advantageous from a tax perspective over others. And so if you're providing folks with the ability to trade in real time, your investors are going to want to make sure that you have gone through the appropriate due diligence from a tax perspective. Again, custody is evolving for the institutional solutions. We've seen a number come to market. Most recently, one of the most exciting ones is Fidelity as the fourth largest asset manager in the world. They have come forward and said that they will be providing custody solutions for digital assets. I think we'll see a lot of other firms such as Fidelity come forward with digital custody solutions. But as these evolve and emerge, that's just something to keep a pulse on if you're going through this real estate tokenization process. And then in terms of digital payment options, I think the key here is that if you want to really take advantage of a blockchain system, you not only need the tokenized representation of the real estate, but you also need the digital asset that acts as your currency, so that you can take advantage of instant settlement times and efficiencies and automated processing. And cryptocurrencies, tend not to be suitable for security tokens given they're, extremely volatile in price. But I think stable coins are a promising alternative where it's a, digital asset on a blockchain system that is pegged one-to-one with some sort of fiat currency. We're also seeing, central banks around the world take a look at creating digital currencies of their own. That's definitely, I think, where the market is moving. And so as more of these come to light, we'll definitely be able to take advantage of automated processing and instant settlement with, better digital payment options. And then the final piece here is just about regulatory guidance. I think for real estate, the framework for securitizing real estate and offering it to investors is fairly clear already. But new regulation might come forward that allows, more efficient representations of real estate in a blockchain system, and that may also allow further classes of investors to participate. So, where do we think the market is going, right? If you're a real estate firm today, what opportunities are there in this kind of digital marketplace for real estate? And I think there are a few key things to think about. The first here is about creating indexes and bundled products. Similar to how the stock market evolved, right? You started out with creating digital shares of individual companies, and then that eventually matured into indexes and bundled products where investors were no longer necessarily picking stocks on a daily basis, but they're investing in funds or bundled assets. I think we'll see something similar for real estate. And the benefit of doing that is you can create highly customized, unique offerings, for example, by neighborhood, where it's a single fund that represents, a group of properties in digital form in a particular neighborhood. You can do this with a technology at Alpha Point called Smart Baskets, which allows you to create a single digital token that represents a group of other digital assets. Those digital assets can be cryptocurrencies or real estate tokens. And so I think the data providers that can create indexes for a newly emerging secondary market for real estate, and then the issuers that can bundle those individual real estate properties into customized offerings will be a really great opportunity in the market. Again, when we come back to secondary markets, the promise of liquidity on a blockchain system is really only realized when we have a robust liquid secondary market with the right guardrails that has the right demand and supply kind of balance. And if you're a large real estate operator today, the opportunity to create a secondary market for digital real estate is, really an advantageous position to be in. You can offer richer content and data. Your trades aren't going to be as frequent as they are in traditional equity exchanges. But as a real estate, player in the market today, if you're creating your own secondary market, that's a really advantageous position to be in and an opportunity to consider going forward. The last point I want to touch on is about data standardization. In order to facilitate index products, in order to create this kind of robust liquid secondary market, the standardization of real estate data is going to be very critical. And, we already have a number of services in developed markets for data around real estate, but they mostly support individual investment or purchasing opportunities. And so that data provider that can create, standardized benchmarks by which to evaluate real estate opportunities in this digital marketplace will be one of the key players in the market going forward. So thank you all so much for listening to this webinar. We hope that this was informative and provided, some answers to you when you consider tokenizing real estate and some things to think through. If you still have questions, please feel free to reach us at sales@alphapoint.com or through your account manager if you're a current client. And again, my name is Asha Dakshinamurthy. I am the product lead for asset digitization here at AlphaPoint. So please feel free to reach us if you have any other questions. And thank you so much for your time.